1-1, 1-1. Good day, everyone. Welcome to this live trading session here. How is everyone doing today, guys? How are you doing? Is everyone having a great day so far? And of course, how is trading going? Guys, let me know, where are you watching us from? So we are looking at the gold chart right now. The market, I can say, is trading under normal volatility for the New York session open. We don't see any weird spikes so far. Also, we didn't have significant news. As you can see from the calendar, we only had the unemployment claims, and that's an event reported every single Thursday, same time. The number always is anywhere between 200,000 to 230, give it or take, so it doesn't make so much of different. The only thing occurs around this event is some minor spike price. So if we start with the gold, then let's start from the daily chart to understand a little bit the vibe of the market. So first thing first, we want to identify some key levels of support, key levels of resistance. I will go from the previous day's low first as the key support, previous day's high as the key resistance, and currently the price is around this key level of support, which was also the Tuesday's low. On the daily chart, or from the daily chart, we can see the market being a bit indecisive. All these candlesticks started from last Wednesday, guys. They were inside candlesticks. Remember, raw price action is the key to enhance your trading and increase your chances for being a successful trader. Candlesticks shows what is happening, who dominates and who does, and who is the main force in the market. So what we see here, it's been 1 week, the candlesticks became smaller. Yeah, see all these candlesticks compared to that one, especially yesterday, a doji candlestick, very indecisive price action pattern. On the 4-hour time frame, we see a lot of wicks. That means the market didn't accept it a price as a significant level. We didn't see closes below or above, and it left behind all these wicks. We don't see a lot of clarity on this 4-hour. Let's drop time frame hourly chart. Things become more interesting here. We have to amend this support because the candlesticks cut it through. So if we see below the current price, here is a key level of support, we can add it there. Above the current price is the London's high, which is uninteresting. So in this New York session, we want to see either a continuation, and if the price keeps going down, this $5,136 will be the key support. And on the flip side, we have this to work with as resistance. Now, on the 15-minute chart from this time frame actually onwards, I want to figure out the direction so I can place my trades, right? Okay. Alrighty. Yeah, let's keep moving forward. So what we want to see at this point on the 15-minute time frame is either these lower lows to continue all the way down here, or we want to see a change of market structure. Now, if we take it from this part, continuing from yesterday, the market did this lower lows here, then we had the lower highs like this, create a double bottom here with a false breakout, then it went up, came down after it made that higher high. As I teach in my course, this is the non-failure swing low, or just keep it simple, use it as a failure swing low. Failure swing bottom, failure swing low. Now the market made a higher high here, so most likely we're gonna see buyers in control. Now things will change if buyers fail to step in anywhere between these two levels. I'll point them on the chart. Around 61 and 78.6 are the key Fibonacci levels, and where here the key Fibonacci, and where the price should find some support. If we fail to see that, then buyers won't be the dominant force in this move. So let's focus on that one here, guys. How to get into some trades? I use price action, I use candlesticks. When I say price action, I mean candlesticks. I consider myself expert in reading candlesticks and understanding the market forces, and that's what I teach not only in my courses but also in private mentorship groups, and everywhere I'm invited to do webinars. So we do expect the price to come here. Let's see what's going to happen. In the meantime, let's check the euro. Volatility on the euro is quite good, about 6 pips per candlestick. It's the average range. But let's start with the top-down analysis and what the daily chart shows. Keep going, give us some trading ideas. I will. So let's buy. Let's just buy. Daily chart, euro, US dollar, guys. So here we can see a key support at this point. Price is very close to that one. At this support, we can see a lot of buyers stepping in. Why I say that? Because this candlestick here 4 days ago was a bullish engulfing, and bullish engulfing signifies key reversals like this one here. Bullish engulfing, after that buyers took control. This one here, bullish engulfing, after that buyers took over. This is one of the best candlesticks to learn and trading in all time frames. After that bullish engulfing, what I see are smaller black candlesticks. Sellers trying to push the price lower. Of course, the trend is down. It's not an uptrend, but maybe here buyers stepped in. Where there is a wick signifies the intense volume in that candlestick, because they were equally buyers and sellers fighting who is going to dominate all these levels. So what we can expect here are two things. First one, first thing, if we see lower time frame rejection here, then we're going to go for we're going to have a double bottom on any 4 1 hour 15-minute time frames. But if we're going to see a close below that one, it means sellers most likely will take control, and we're going to see continuation to the downside. On the 4-hour chart, for this session, we have to focus on that move. And there is no much information here. So let's keep going on the lower time frames. That's the hourly. On the hourly, the market is very clear. Lower lows and lower highs all the way. We can use some channels to check if they can fit. No, that's not a valid one. So the only valid channel is this, and I don't really like it. So right here, I'm gonna try to avoid as much as possible the euro for this session, but in case we get a very obvious candlestick reversal, especially, we can trade it. Now, it's something that I want to share with you guys. Look at the price was going down, and this candlestick here. Yep. This candlestick suggests that buyers tried to push the price higher and failed, and then the market reversed. So high chances are the price to continue down. But what happened 15 minutes later? Sellers pushed the price lower, but buyers were picking up and absorbing all the sell contracts here and all the sell orders. And then the price moved up and the candlestick closed as a bullish candlestick. So from this point, we do expect the buyers to step in. Now, let me ask you this. If sellers try to push the price and in the next session, buyers defend 100% the levels, who is the dominant force in the market? Who is in control here? And this is an area where I see so many traders getting caught in bad signals, and they trade the moment should stand aside. This is not a high quality market right now for a trader who seeks consistency. So back to gold. Let's see if something changes here. 15-minute time frame. Price is still hovering around now the 61.8. On the 5-minute chart. 5-minute chart, this is what we see. Sellers are trying to go through this area. And of course, I couldn't leave NASDAQ away outside of this session today. Let me just delete everything from, what is this now? Let me just delete everything from here. So top-down analysis on NASDAQ. Do you guys trade NASDAQ? Previous day's high, previous day's low already taken out. That means we're gonna likely to have a bearish session today. But let's check the lower time frames. Yesterday's candlestick was an inside one, and as an inside candlestick, this one here suggests that a break either to the downside or to the upside can put the price into that direction. For our time frame, guys, the market is extremely bearish. Is getting down to the Asian's low. That's the Asian's low. This one here. Hourly. Finally, we have the lower lows and lower highs, so we can comfortably start looking for short positions. Look at this formation. Aggressiveness from the buyer side, they were pushing the price up. Consolidation here, and the distribution phase started. When you see moves like this, the distribution lasts, or the consolidation lasts longer compared to the trending, it means the market is about to change direction. This is what history teaches us. This lower low here and the confirmed lower high right now is the evidence that the market, guys, is in a downtrend. What we want to see before we commit to sales is a clear break of these lows. If you don't see a clear break below these lows, there is no way to sell this market. We don't want to guess if the breakout will occur or not. We don't want to go down that path, okay? We don't want to be the trader that once in a blue moon figures out the direction. We want to see clear conviction, clear direction, and we want to trade in that direction. If that makes sense. Huh? Let's see if buyers will defend this level here. As I said earlier, this is the Asian's low. Guys, trading should be simple. Asian's session low. This chart teaches us a lot. We have to understand the market dynamics. I know if you are new to trading, this might gonna take some time, but there are simple principles here. You see price at support, don't sell. If you want to buy, that's a different story, but don't sell at support thinking that the market will go for a breakout. It might, yes, and it might gonna go down to a breakout, but you don't know what's gonna happen. So in order to avoid bad signals, it's much easier for you if you stick with trend trading. Learn how to trade the trends, lower lows, lower highs, higher lows, higher highs. Learn the candlesticks, pay attention to what I'm teaching you about candlesticks, and pretty much that's all what you need, at least to start becoming a consistent trader. On the 1 minute chart, the market moved down, of course, and now it's in a retracement phase, and there are two chances here. First, if the price breaks and closes above this high, and second, if it breaks below this area but closes. We want to see how many candlesticks, guys. We want to see 2 candles in a row. 2 candles in a row will be enough to validate the breakout. Just 1 candle is not enough. We need 2. Did anyone place trades, guys, so far? Alrighty. This is NASDAQ. Guys, I want you to see how useful is Fibonacci tool. Let me show you here. Every time the price moves strongly into one direction, if you start using Fibonacci to plan the retracements and your entries, you will be amazed. I'm sure some people are using it, but if you don't use it, you should start considering it in your trading. Usually the 50%, 61.8 and 78.6%, this area is an ideal area to look for retracements. But this is not enough by itself. Although I know many traders, they use only Fibonacci and they have good success with that, I can say, but you increase your chances for great trades when you align the Fibonacci levels with static support or resistance. In a downtrend like this one, a static resistance among with Fibonacci plus reversal candlestick like this one here, it's the way to go. So the market is going down for another impulsive trend leg and potential continuation to the downside. Gold, 5-minute chart or 15-minute time frame. So the gold now is it bounced from 78.6. Then we want to see if buyers will pick it up and move the price away from that. So this is a doji candlestick, guys. A doji candlestick at a key level of support or Fibonacci can also be used and can be a great buy signal. Okay, I'm not saying, and just to make it clear, I'm not saying to anyone buy yourself in this live, but and don't consider anything as a financial or personal advice. One of the best ways to look for changes in the overall market is to draw some trend lines and wait for the trend line breakout. And here we are. Buyers look like they can't rescue this market. Let's see. The best way to trade reversals is to wait, for example, in this case, lower lows and lower highs, lower lows, lower lows, lower lows, and lower highs, lower highs, lower highs all the way. You wait for a change in trend. So this high and that low to invalidate it from the downtrend and to see a new higher high. If you try to buy here expecting the price will move further up and expecting an uptrend, the beginning of the uptrend, you have to understand that you are trading against the downtrend, and at this point sellers are in control. Maybe this is the last point where sellers were able to push the price to these levels, and the reversal will start right here where we are now. But this is maybe. We don't have conviction that buyers will start a new trend. This is why I prefer to see a clear break of the recent swing high, like the one I just pointed, this one here, to validate the beginning of the new uptrend. And it's good if you are doing day trading, it's good to look at the 1 minute chart for the change of market structure, guys. It's very helpful, extremely helpful. Sometimes the candlesticks on the minute chart are more random compared to the other charts, but to use it for market structure, it's absolutely phenomenal. And gold market, to be honest, becomes very interesting here. So now I became curious to see if price will move up there. We will see. Let me give you a tip here. There is a great chance buyers to become ultimately the dominant force here around 5,147, 150, and the price to move higher. And it can happen, and someone can buy this level. Let's make a scenario that you bought here, you place the stop loss right there, let's say, or below this low. You want to be more accurate, and you are targeting the highs here, which leaves you with more than 6-to-1 reward to risk. This can happen once in a blue moon. So how often the moon turns to blue color? Not every day, right? So essentially, if you replicate this 100 times, you place the exact same trades in different times, 100 times, every, let's say, 4 times, 4 out of 6 you are getting losing trades, and 2 out of 6 you are getting winning trades. And maybe I exaggerate a little bit, maybe 5 out of 6 you are getting losing trade and you get only 1 winner. So when you trade this type of market structures, that you try to buy the potential beginning of the uptrend, listen to my words, the potential beginning of the uptrend, you're gonna get it right sometimes, and you're gonna make large reward to risk trades. Now, you have to ask yourself, how consistent can you be with loss after loss after loss after loss and still executing this setup? It's good when you place a trade and it goes so far away and you make so much profits, always considering the losses. But you have to understand your own mindset. How do you react? And do you become impulsive when you get into trades like this, and then you're having a losing strike one after other after other? Because big win to loss ratio and big reward to risk ratio are two things negatively correlated, not opposite, not positive correlated. I know traders, because as I said, I'm also a coach, trading coach, and I worked actually with traders. They were only having two winners in a row, and they were going off charts. They were becoming overwhelmed. And I also work with traders, only two losses in a row, they were enough to wipe them out of trading. They were breaking their rules all the time. They were over risking, over leveraging, so everything was on the edge, over. Okay, we don't want to do that. Trust me, you don't want to be that kind of trader, because then you have to fight with your mind all the time. And I mentioned this as an example. I didn't take these trades, okay? These are not trades I personally trade. Alrighty. So if someone had bought gold at 78.6, now you should be sitting around 2%, 2 to 1 reward to risk. And that's the reality. For me, now it's the time to look for long positions. I want to wait for the retracement. So what is happening at this moment? The buyers right here running out of steam. Okay, candles became smaller. Look at these two doji candles after a bullish Marubozu candle. That means buyers are running out of steam, but this doesn't mean that the uptrend started developing right here. It came to an end. That means the market is setting up for a retracement. So usually we expect retracements around Fibonacci cluster as well as static support. If we don't have the static support, we can use what we have in trading. I know this it's a bit for more advanced traders. Let me find the rectangle. Where is the rectangle here? Here is the rectangle. This is what we call low volume nodes. Low volume nodes are areas where the price and market participants disagree on value. So the market moved fast from point A to point B and left behind an imbalance area. Okay. So if buyers won't stop here, that will be a different story in this area. The first thing we saw is that the market on the minute chart changed structure. So the lower lows and lower highs that were here turned into higher highs, and now we are waiting for the higher low. So lower lows and, can I use this one? No, this one, yeah. So lower lows and lower highs all turned into higher highs. Now we are expecting the higher low. Let's see where you see some buyers stepped in here. Guys, how accurate is trading with naked charts like this one, pure price action, pure candlesticks, understanding what candlesticks are telling you. The biggest problem I see in traders, they want to predict where the price is going to go next. And this is a huge misconception. You will ask me now, okay, Theo, if I don't predict where the price will go next, how can I buy or sell the market? Yeah. Do you agree with that? Well, you do your analysis based on some statistical repetitive price behavior. And at some point, you have to start trusting the technical analysis or the charts, the candlesticks, the volume analysis, whatever you are using. Okay. So every time the market makes higher highs and higher lows, it means it's trending to the upside, like we see in this case here. There is a very high chance, or there is a higher chance, buyers to keep pushing the price up than sellers to change the trend. I'm not saying it can't happen, but there is a high chance. It's all about probabilities here. The only way we're gonna trade in the opposite direction is if we see a break below this low. So far, we don't have any signs suggesting that the market is in a downtrend. On this time frame, guys, if you flip time frames and you want to trade, let's say, the 1 hour chart, maybe you're going to see a different picture. If you're going to see the 15-minute chart, maybe you're going to see something different. The 5-minute chart suggests that this market is in a downtrend. The 1-minute chart showed that the market changed structure. Okay, so you need to have a specific plan, and you need to accept that there are times you're gonna get it wrong, and it's nothing wrong with that. Okay. Okay, let's see. Gold. NASDAQ. NASDAQ also is trying to turn. Let's see. Still makes lower lows and lower highs. So on NASDAQ, to start looking for long positions, we have to see a break above this, a break and close above this high here. Not this one here, guys, because this second high formed without market structure defined. The market structure was here, lower lows and lower highs. Once the price created this move, a retracement with this bearish engulfing suggests to short the market. So the lower highs are still intact. Now, if the price remains here, the lower highs are still intact. So I'm not going to look to buy into this one. Only if the price breaks this high, I'm going to be looking to buy NASDAQ. Is that clear? Makes sense, right? So this is one of the very classic bearish engulfing patterns that I love trading. Most of my trading is based on these patterns. Bearish engulfings and bullish engulfings, but. There is always a big but here. First is the context. You need to see is the trend. You need to put the candlesticks in a context of the trend. You cannot simply trade candlesticks ignoring the bias, who is in control, why we see this move now, what's really happening here. Always trend comes first, is the direction, and candlesticks are part of the execution. My three pillars in trading is selection, is the STM, selection timing management. You select based on market structure, you time based on candlesticks, and you manage your trade the way I'm going to explain you in another live session. So the market is still bearish here, okay? It's not bullish. There is no uptrend in place here. Maybe we're going to see bullish candlesticks, but it doesn't mean the market is in an uptrend. Gold found it hard to break above this high, and this can signal now the end of this trial from the buyers, obviously. Every time the price tries to make a new high and fails, and a break of the recent low happen, the market will change direction. So if the price closes below this swing low, then most likely we are heading for a downtrend. But so far, at this point in time, there is nothing to do. The high quality trade was inside this box, as I explained, the low volume note area. Inside that box was the LVT, low volume note, low volume note. So there were two opportunities here, one and the second. Sellers broke this low. That means this move here failed, and now we are hitting, as I said, likely we are heading for a downtrend. For me, it's not a good place to sell right now because it's in the middle of the move. I want to see the sellers taking clear control of the market and wait for the retracement to go short. NASDAQ also drops. On NASDAQ, this area here, this one here, is a balance area. Why this is a balance area? Because both market participants, buyers and sellers, agreed on the price. They equally interacted from 24,640 to 24,300, just I round the numbers, and is where the price found it comfortable for some time before it explodes with a new impulsive upward move. That means if the price comes here, anything can happen. We can see both buyers taking control and pushing the price up, or sellers breaking aggressive to the downside. And I will share something else with you. Right here, inside this box, you want to see two things. You want to see a black candlestick like this one here, like this one, like that one, a long black candlestick. Aggressive sellers pushing the price below and closing below this level. What you don't want to see is a candlestick like this, with a little bit of wick inside that box, because then what? The market will become a ranging market. It will lose its trending formation. See, gold had a bullish engulfing here. The price went up. Sellers tried to push the price down. The market is it's a little bit equal. Buyers are defending well the levels, sellers trying to push down. We don't see a move, like this one here, clearly dominating by sellers, or like these three candlesticks here, or like this move to the downside. We have also buyers interacting with the area. Then and for this reason, I don't want to transact anything here, because once this this new fresh move to the upside failed, I mean, I don't know. I don't know how aggressive sellers will be. And now we have this candlestick, inside candlestick, but also an inverted hammer. Inverted hammer, inside inverted hammer, it has bullish implications. It suggests that the price can push to the upside. Do I want to be that guy trading a so-so trend? No, I don't want to be. Also, maybe we can see a break below this low in the middle of nowhere. Then let's say we place this trade. Where are we going to put our stop loss? If we put our stop loss there, that's not a strong swing high within the market, because all this move here can be end up as a retracement and the price can go up. Maybe this is where sellers will defend the level. Maybe this is going to be the area. I don't know. There is low probability to get good trades here. What we can trade is purely candlesticks based on the inside formation now. This long bullish Marabozu, yeah, it's already broke the downside. I was about to say that a break below here can push the price further down. It's a classic break of the inside candlesticks. I used to trade these setups, the inside, double inside break of these inside candlesticks on the Euro US dollar, guys, and on the 4-hour time frame. If you are looking to trade the candlesticks and you want high quality setups and you don't mind to stay in a trade for some days, you can look the breakout of inside candlesticks on the Euro US dollar 4-hour chart. So the market remains as an inside, double inside, see a break during the Asian session, break of this low, couple of candlesticks are enough to give to produce the outcome. Or this one here, inside, the break of the mother candlestick, boom, the price went down. These things are gold in trading. It doesn't occur, it doesn't happen often, but when it does, it's a no-brainer. Oh, NASDAQ is going, it didn't go down. Look at this. It came right at the balance area. Guys, look at NASDAQ, right at this balance area. It bounced and we are waiting for the outcome. Gold, inside, it came with a false breakout. This is another balanced area on gold, guys. This one here, we have interaction between buyers and sellers. When you see black and green candlesticks together, for a beginner trader, just to help you out, is a good area to understand there was a balanced market. And usually the price wants to come back to these areas because it felt comfortable. And this is why we see the wick right here. But as I said, we don't want after this failure, because I was expecting this higher high to be the beginning of the new uptrend. It failed to continue with higher highs, then for me it was end of story. Now for me becomes either a new buying opportunity when a candlestick closes strongly above this high, or when a candlestick closes below this low. Anything here in the middle, for me, it's simple observation. Observation, understanding the market, and also learning from the market. Every time you let's say, finish your trading session, you can learn either something new about the market, or you can learn something about yourself. You can see yourself behaving differently from session to session. Also, your mindset affects your skills. There are things you need to pay attention to, guys. Reading the chart is a good thing, but you have to learn from your own behaviors. If you want to upgrade your trading version, you have to learn from your own behaviors. See, what did you do right based on your trading plan and worked? What did you do right and didn't work? What did you do as what mistakes did you do? How can you fix them? If you need help, reach out. I can help you, of course. If you really don't know how to read candlesticks, if you don't know how to read trends, if you don't know how to create a clear plan, guys, just jump on my course. You're gonna find it's 10 hours of information. There are videos, 10 hours videos, 30 modules. I break down everything step by step and I link them. So on every module you learn something new and we connect it to the previous one. So at the end, you know exactly what to do, when to do it, and how to do it. And that's all. So another inside candlestick. Look, it looks like sellers are a bit more aggressive than buyers here because of the size of these black candles. Now the cash market open. NASDAQ broke outside this area. Let's wait for a couple of minutes to see if this is going to be a valid breakout or a false breakout. So guys, I think I will end the live stream here. I would like to thank everyone that joined me today. So we're going to be here again next week with more market information. Just make sure you subscribe on the YouTube channel so you get the notifications when I go live. For now, it's going to be 3 times per week, and hopefully New York session, and hopefully down the track we're going to increase them to daily sessions, and why not to include the London. So take care everyone, happy trading, and I will see you